there has to be a way that a business owner or somebody who is an entrepreneur and wants to realize their dream of starting their own business can do that and still afford health insurance to protect themselves and their family. Hey everybody, thank you for joining me today on the Biz Reveal. This is Craig Sawyer. We're going to be doing things just a little bit differently today. Today, I am going to be the host and also the guest. Today, we're going to be discussing health insurance for self-employed, independent contractors, families, and individuals. That happens to be what I do for a living. So I'm going to be going over the most frequently asked questions and any term explanation, things like that, that will help simplify the process of getting health insurance for you folks who are venturing out on your own for the first time, not able to enjoy the benefits that come along with a corporate position and having to go out and get it on your own, but still try to find the best options out there and actually find out what options really are out there. So that being said, a little history on me. Back in 1999 to 2005, I was a United States Marine, and I was trained as an 1161 refrigeration mechanic. So I worked on water chillers, air conditioners, things like that. When I got out of the Marine Corps, I worked as a journeyman in the union for heating, venting, and air conditioning, HVAC, as a sheet metal worker, and I got to enjoy union benefits and union health insurance. That was pretty awesome. After I got done doing that, I did that for about 3 years or so. I got into retail and restaurant management for about 17 years. So I worked in various positions for various companies and got to really feel a lot of different ranges of health insurance benefits from the different corporations that are out there. And if any of you have worked for a corporation and have received those benefits, you know that it's kind of based off of how large the company is. Obviously, the bigger the company, things are cheaper when you buy in bulk. So the bigger the company, typically the better the benefits and cheaper you can get it for. Typically, not always. So I did that for 17 years. About 4.5 years ago, my kids are starting to grow up and I can start taking a little bit more of a risk. I decided to go into business for myself as an independent contractor, as a health insurance agent. And that's what I currently do now. Now, doing that as an independent contractor, like many of you, I had to go out and find my own health insurance. Now, I have it through the company that I work for, of course, but it was new. It was certainly new for me because I honestly didn't really know that much about health insurance. I didn't want to. That was one of those things I gave to my wife and said, "Here, you do this. I don't want it." But I learned very quickly because I had to take the state exams and all that. But it is difficult and it's hard to know what the right plan would be, where to go to look to see if there's any other options and things like that. So that is what this podcast is for today. We're going to help you guys out a little bit, make that process a little bit simpler and hopefully a lot faster so you'll know where to go. So that being said, what we're going to be doing today, I put a post out on social media last week and I was asking everybody, if you could change your health insurance plan, what would you change? What are the main questions you have about health insurance, either your own plan or just health insurance in general? What questions do you have? And these are the questions that came back most often and which ironically also fit the most asked questions that I get from day to day when I'm speaking with my clients and talking to them about their health insurance. So let's get right into it. The first question I have here is, are the marketplace plans the only options available? No, they are not. In fact, there's a lot of other plans out there that are available. I don't know the exact statistic right now, but the last I checked, I believe only 8% of Americans use the ACA plans or Obamacare, Marketplace, Exchange, whatever you want to call it. It's only 8%. That means 92% of people are getting it from other places. Where are those other places? Well, one of them could just be an employer plan. Right. And a large majority, I wish it was a larger majority, but a large majority of us get it through our employers and we are able to enjoy only having to pay like half the premium or less because the employer pays for the other half. And it's a great thing for employers to do because if you can offer benefits, that helps keep people longer. It gives them a reason to stay with you. So keep that in mind if you're planning on possibly offering benefits to your employees. It will keep that turnover rate much, much lower. So going back to the question, marketplace plans. First, let's talk about what a marketplace plan is. All right, marketplace, it's going to be called different things. You call it the marketplace, the exchange, the marketplace exchange, ACA, Affordable Care Act, Obamacare. If you hear any of those terms, they're exactly the same thing. All right. Those are the plans that we all know and hear about every year that you can get from November 1st through December 15th. That's your open enrollment period to get on one of those plans. If it's outside of that period, before or after, you cannot get on it at all unless you qualify for an extenuating circumstance, such as divorce, loss of coverage, things like that. These plans are the ones that you go to healthcare.gov to find. However, I don't recommend going to that website if you're just shopping for one. If you know what you want and you want to buy it, fine. But if you're just shopping for them, a great website to use that I use with all my clients when we're shopping for the best plan for them is healthsherpa.com. And that's health as in health insurance. Sherpa is SHERPA.com. Phenomenal website, guys. Trust me, I'm not making any money from them, so they're getting some free advertising right now. But it's a very easy website. It takes like 15 or 20 seconds at the beginning to put in your age, your gender, your zip code, and your income, your expected income for the following year. What that will allow you to do, they'll then take that information and they will show you the plans that are available for you in your area. And the reason you put your income in there is because you may also qualify for subsidies. And what subsidies are is basically it's a payment that the government is applying towards your health insurance to help cover the cost of health insurance. And that's based purely off of your income, your household income. If you make below a certain threshold, then they can either give you a percentage, a certain percentage towards your health insurance, or they'll cover the whole expense and you have free health coverage. If you make more than that, you're paying the full price. Unfortunately, the full price is typically a little higher than most people want to pay. And there's multiple reasons behind that. One, because, obviously if some people are getting it for free, that money has to come from somewhere. So the rates are maybe a little bit inflated to help cover that. You also have sometimes higher risk people using those plans. And I'll get into that in just a minute. So, obviously the higher risk you have in a pool, the more expensive the rates are going to be. You have deductibles that you have to meet, which is how much money you have to pay out of your own pocket. Even though you're paying for health insurance every month, that's just to have the coverage. You also have to pay an annual deductible before you can actually use it. So that's another thing we'll get into here in just a few minutes as well. But that will list out all of your options that you have. And it's different by zip code. So if a health insurance agent asks you for your age, your gender, and your zip code, that is why. That's what health insurance rates are based off of. And it also tells us what plans are available, because what's available in my zip code, trust me, is not available in every zip code. So that is why health insurance agents have to ask that question. So that's going to be your ACA, your marketplace, your exchange, your Obamacare plans. You also have, you've got the short-term plans. Now, short-term plans are exactly what they're called. They're for short term. And I think they're actually phenomenal for that purpose. If you're planning on keeping a plan for a long period of time, like most of us are, I don't always necessarily recommend that route. And the reason why is because those deductibles reset every term, and that term can vary from plan to plan. It could be 3 months, could be 6 months. But at the end of that term, your deductible will reset. No matter if you've almost met it or not, boom, it goes right back to zero and you have to start all over again. So if you have a 3-month term, at the end of that 3 months, boom, your deductible is all the way up again. Also, you have to qualify each term as well. So if you had anything happen during that first 3-month term, then you may not qualify for the second 3-month term, which leaves you with no insurance. So I think it's a phenomenal thing to use potentially if you are using it for short term. Like say maybe you had a job that you had coverage with and you're moving to another job, but you don't qualify for those benefits for like 90 days. Use the short term plan for that 90 days and boom, jump onto your employer's plan. You also have share programs, and these have been fairly popular the last few years. And what a share program is exactly that. It's a program. It's not insurance. Okay. And there's a lot of misconception, and there's also a lot of misunderstanding of what that actually means. So basically what a share program is, and again, remember guys, I'm keeping this very simple. I'm not going to use a lot of technical terms and things. Okay. So I am going to be overgeneralizing a lot on all of these programs and all these different types of policies you can get. But in a nutshell, what a share program is basically where you are paying for everybody else's coverage with your premiums, and then they're paying their premiums every month for your coverage. Right. So, basically it goes into one big metaphorical pot, right? You got a big giant pot of money that everybody's paying into. But if you look on their websites, they have to do this to stay compliant with federal regulations. They have to say, this is not health insurance. Payment is not guaranteed. And let me repeat that. This is not health insurance. Payment is not guaranteed. And I don't know about you, but the whole reason I pay my health insurance premiums is to guarantee that it's going to be there for me when I actually need it. So I'm not saying don't get those plans, but just as long as you are aware of what they actually are, because if something were to happen, you kind of have to ask permission to be able to take the money out of that pot, because remember, it's not yours, right? And you can't take something that's not yours without asking. But that's exactly why payment's not guaranteed. So be aware that those are out there and they can be useful. I've had about a 50-50 mix when I'm speaking with people who have them. Some of them say they're phenomenal. They will never get rid of these things. They absolutely love it. But the other 50% is like, no, I don't want that at all. I want to make sure that I have an actual health insurance plan. And then finally, you have private health insurance plans. And I think that this is probably the best way to go if you qualify for them. And that's the key. Not everybody qualifies. So with private health insurance plans, these are going to be your off marketplace, right? So they're available all year long, not just November to December. So if you have no insurance and it's May and I don't want to wait until November. Of course you don't. You want to make sure that you're safe and protected and your kids are safe and protected, right? All year long. You can jump on one of these plans anytime throughout the year you want to. And what's really, really cool is a lot of times these plans, you can also change them throughout the year if you want to. So if you want to add dental or vision or any of the supplemental coverages, you want to just alter the plan a little bit, you don't have to wait till November to do it. You can do it anytime you want, as often as you want to. And another really cool thing is because we are in early June here when we're recording this, COVID's happening. A lot of people have lost their jobs. Well, you don't want to cancel your health insurance, right? Because this is a health pandemic. The last thing you want to do is cancel your health insurance, but your income just dwindled down a lot. Where do you save money? Well, with some of these private health insurance plans, since you can change them anytime throughout the year that you want to, as often as you want to, you can actually reduce the benefit levels, the payout levels, and it will also reduce your premium. So you can save money by just reducing the coverages without actually getting rid of your coverage completely. That's awesome. I think that, we would all agree that is awesome, that it's that flexible, that you can kind of change it. You get that job back again, boom, put those coverages back on and you're back where you were. All right. But it does allow you the flexibility to give yourself some temporary relief if you need it. However, when I say that you must qualify, a lot of these private plans are medically underwritten, right? So what medical underwriting does is it means that the insurance company is going to look into your medical history, usually going back 10 or 12 years or so, up to current, and they're going to make sure that you don't have any pre-existing conditions that would be a cause for a lot of expensive claims. Okay, so this does two things. It protects the insurance company. They're bringing you on because you're low risk, right? At least historically, you're low risk, and it saves them money, right? It saves the insurance company money, and because they're not paying out all these large claims. But in turn, what they are doing for you is saving you money on your premium. They're giving you a lower premium because you're low risk. So they're rewarding you for being reasonably healthy, right? And we're not all perfectly healthy. Nobody is, right? We all have something going on. So it doesn't mean that if, you have high blood pressure, you're not getting on a plan. That's not what that means. It just means, if you had a heart attack 9 months ago, you may not be the right person for a private plan. Or if you have epilepsy or diabetes, things like that can prevent you from getting on some of these plans. So only about 60% or so of the people I talk to, because I work with private health insurance plans, only about 60% of the people I speak with actually qualify for them. And it works exactly the same way that car insurance works, right? And that makes perfect sense if you put it in these terms. So if you have car insurance, if you have a clean driving record, right? You don't have any tickets, you haven't had an accident in 15 years, you are the squeaky clean poster boy for vehicle driving, right? You're going to be paying a lower rate because you're low risk than the person who has 15 tickets and 3 accidents in the last 2 years. Okay. So, and that just makes sense. That person's obviously a higher risk. They're going to have a lot more claims to turn into the insurance company. Therefore, their rates are going to be a lot higher. Same thing with the health insurance. If you have a lot more claims, whether it's your choice or not, I get it. Some health conditions, look, we can't prevent them. Cancer doesn't discriminate. It just happens. But if you are somebody who doesn't have any of those issues, why should you pay the same high rates as somebody who does? You're not putting any claims in. They're putting a lot of claims in. Okay. So you can save a lot of money and possibly enjoy a lot more and a lot more usable and a lot more benefits, period. And, possibly a lower deductible or no deductible. You might be able to get a PPO instead of an HMO. And I'll get into that in a minute as well. So look into private plans. They are phenomenal options for those who qualify. All right. So I think I got that question answered. Sorry, that was like one of the bigger questions that took a little bit longer. Next question was, is health coverage available outside of open enrollment? I think I just answered that. So sorry about that. That was a little bit inadvertent, but yes, it is available outside of open enrollment. The only plans that you have to wait for the open enrollment period of November 1st through December 15th is those marketplace plans, the ACA, Affordable Care Act, Obamacare plans. What is the difference between an EPO, HMO, and PPO? I love this question. I get it all the time. So I'm going to give you a really good analogy on this here in a second. And hopefully that'll clarify this and make it a little easier to understand. But just real quick, PPOs, basically a PPO plan just means that you can go to literally any doctor in the country you want to go to and you still have the same coverage. Okay? You can go to any doctor and you have health coverage. An HMO means that you're going to be provided a list of doctors. Typically, they're all going to be in the same state that you got your health plan in. And it's going to be a fairly large list, but it's a list of doctors that you have to go to. They're called in-network. As long as you go to one of those doctors, you have health coverage. Right? Your plan works. If you do not, and you go outside of that list and use a different doctor, you do not have health coverage. You cannot use your plan on it. Now, you may say, oh, well, that's fine. They're cheaper and my doctor is part of that HMO network, so I'm fine with that. Good, but take this in consideration. I personally had a sister-in-law who passed away about 2.5 years ago of multiple myeloma cancer. And she lived here in Florida, and she wanted to go see a specialist in Houston, Texas. Okay, so if she would have had an HMO plan, she would have had to go see a doctor here in Florida for her plan to work. If she wanted to go see that specialist in Houston, who of course you want to go see a specialist, right? Because that's going to give you the best chances of surviving the cancer. She would have had to pay for that out of her pocket. So it's really important to know that if you have an HMO, if something like that were to happen, you cannot necessarily make your own choice of going to a doctor outside of that network unless you're willing to pay for it 100%. And when it comes to cancer, trust me, you do not want to have to pay for that. So keep that in mind with HMOs. Great plans, especially if your doctor that you currently go to in town is on one, great. But keep in mind specialists or anybody that you might need to see for a special condition, heart condition, something like that. If you want to go see a specialist, you might want to keep that in mind. Now, an EPO is very similar to an HMO, except much smaller. Where you're going to have that select list of doctors that you have to go to. If you go outside of it, you're not going to be covered. But it's a much smaller list. So here's my analogy I wanted to give you guys. If you put it in terms of car insurance, again, let's use the car. Let's say you live in Dallas, Texas. Okay. If you live in Dallas, Texas, and you get insurance on your car, the equivalent of a PPO plan would be that you could drive that car anywhere in the United States and you have you have car insurance on your car. Okay. And that's how car insurance does work, right? So basically your normal everyday car insurance could be equivalent to what we would call a PPO in health insurance. The equivalent for an HMO would be like purchasing your car and getting car insurance in Dallas, Texas, and you're insured as long as you stay in the state limits of Texas. But once you cross over the state line and go to another state, you no longer have insurance on your car. That would be the equivalent of an HMO. And an EPO would be like getting insurance on your car in Dallas, Texas, and once you leave the city limits, you no longer have insurance on your car. All right, so that's kind of a good picture to kind of have in your head when you're looking at PPO, HMO, and EPO. Next question. Will I be able to use my current doctors? Again, that kind of falls in that last question. PPOs, the answer is always going to be yes, because PPO, you can go to any doctor you want to. Now, let me clarify one more thing though. Even though you have a PPO, you can go to any doctor you want to, but if you're in network, it's much cheaper. So let me give you an example here. Let's say that your health insurance plan is on the Cigna PPO network, for example. If your doctor takes Cigna PPO, that's one of the networks they accept, then obviously, yes, you have a PPO, so you can go to them anyway, but you're also going to get a network discount. And what the networks are is basically it's just agreed upon pricing between the doctors and the networks. And it's basically where they're going to give you X amount of discount per visit or per test. All right. So it's this pre-negotiated rates. If you have a PPO plan and you go out of network, your doctor does not take Cigna PPO, yes, you can still go. And yes, your insurance will still pay for it, but you do not get that discount. All right. So let's say that the discounted rate is 50%. Your bill would be 50% more because you don't get that discount. Okay. So that is what's really, really important to remember with PPO, HMO, and EPO is PPO, you go anywhere, right? But you want to make sure you're in network whenever possible because you want to get that discounted rate. HMO, if you're out of network, that has nothing to do with the rates anymore because yes, when you're in network, you do get discounted rates, but when you're out of network, you don't have coverage at all. So you're paying full price and you don't have any insurance coverage. Same thing with EPO. Pre-existing conditions. What about my pre-existing conditions? Okay, I kind of touched on that on the first part when we were talking about what other options were available outside the marketplace. Pre-existing conditions. If you're getting on a marketplace plan, you can get on it. There's no exclusions. It's a guaranteed issue plan, and you can always get on those types of plans. Now, I do get people all the time when I'm speaking on the phone with them that say, I don't qualify for an Obamacare plan. Everybody qualifies for an Obamacare plan or an ACA plan. Sorry, I should call them marketplace plans. Everybody can qualify for a marketplace plan. Now, I think what they were getting confused is they may not qualify for the subsidies because of their income, but that's different. Don't think that you can't get coverage because you don't qualify. Everybody qualifies for a marketplace plan. You just may not qualify for the subsidy help where you get the government helps you pay for the rates. Pre-existing conditions, however, on private plans, as I mentioned, if they're medically underwritten, you may not be allowed onto the plan. And every plan is going to be a little bit different. So just make sure if you're looking into some of those plans, talk to your agent, find out what the specifics are on it, because I can't talk about specific plans. There's just so many out there. But basically, if it has medical underwriting, it means that they can decline you, they can reject you because they're not guaranteed issue. You have to qualify and be approved for them. But typically, I know on some plans out there, if you qualify for the plan medically, right, you pass through the medical underwriting, as long as you qualify and got onto the plan to begin with, you don't have any pre-existing clauses later. Meaning later when you have a claim, the insurance company cannot say, oh, no, we're not going to pay for that because it's pre-existing. No, they've already looked into your medical history before you got on the plan, and they saw it's kind of like getting married, right? You accept them for better or for worse, right? Whatever their history is, you got to accept it or not accept it. And that's what the insurance company does as well. The insurance company has to either accept your medical past or not accept it. But if they accept it, they're married to you now. Right? They have to deal with it. So they cannot deny a claim as long as you divulge that information. Now, that's not all of them. Of course, that's just certain plans. But keep that in mind as well. So definitely, if you're looking at a medically underwritten plan, speak to your agent and ask a lot of questions. What happens if I develop a serious health condition? Great question. And since we're just talking about the medically underwritten plans, same thing. So that's what health insurance is for, right? Health insurance is actually for the times when you need to use it. So if you develop a condition, once you're on the plan, then you want to make sure your health plan is there for you. So that's what they're going to do. Obviously there's going to be different disclosures in the individual plans that you're looking at. So make sure you look at what's covered, what's not covered. But as a generality, yes, that's what health insurance is for. Now, here's another little issue. As I just mentioned on the medically underwritten plans, once you've been accepted, there's no pre-existing clause, right? As long as you divulged all the information on the plan. Again, some of those plans. If it's a non-medically underwritten plan, like just one of the guaranteed issue plans, such as an ACA plan or something like that, then sometimes those plans will underwrite at time of claim. So be very careful. What that means is if you have a heart attack right? You've been on this plan for a couple of years. You have a heart attack. You go into the doctor, get everything taken care of. And then all of a sudden the insurance company comes back and says, nope, we're not going to pay for that. That was pre-existing. And they deny your claim. This is what happens in the stories that you hear about, the horror stories. And it kind of gives health insurance a bad name when this happens, because you're paying your premiums every month to have that coverage, and then you go to actually use it and it's not there. And there's nothing worse than having a surprise like that with your health insurance when you're at your most vulnerable moment. So the reason that is because some of these plans will underwrite at time of claim. And that means that, yep, you came in there for your heart attack. Now they're going to go back in your history, right? Because they didn't at the beginning of the plan. It was a guaranteed issue plan. They don't look at your history. But now they're going to go back in your history and be like, oh, wait, a year before they got on our plan, they had some type of heart issue, like an arrhythmia or something like that. So now they're going to say, oh, well, he already had this issue before they got on our plan. That's a pre-existing condition. We're not going to cover it. So again, great question to ask your agent. If this happens, will they underwrite at time of claim and potentially reject my claim because of naming it a pre-existing condition? Don't let that be a surprise to you guys. Don't let that be a surprise. What can I do for my employees? Again, phenomenal question. Many options here. I am not well versed in all of them, I will admit. There are group plans, of course, for employers to provide all their employees, independent contractors, whatever they may have, with a big group plan. And basically what that means is you have 15 employees, you have all 15 people in one big group, and you have one premium, and you're paying one premium for everybody that's in that group. Pretty simple, right? And it's usually a little bit cheaper, but and look up the local laws and things like that. But typically you only get a discount on a group plan if you have more than 50 employees. So you may be able to get a group plan on 2 or more, right? It's pretty typical as long as you have 2 or more, and that can include yourself, but you may not get it discounted. So you're paying full price for each person until you get to 50, and then it's a discounted rate. So you have that. That's probably the simplest way to go, but not necessarily the most affordable. And if you're in business, you're watching those pennies, right? So you might want something that might want to see if you can get it a little bit cheaper. Best way to do that, check out some private plans, all right? Private plans may save you some money. Depends on the plan, of course. May save you a little bit of money. Might provide better benefits for your employees. Might lower the deductibles. Check out the different plans, see what are available. But it might be a little bit more of an admin headache to begin with. 2 reasons. One, you're going to have a separate premium for each person, right? So because each person is going to have their own separate plan. This is not a group. So each person has their own separate plan. So that's going to be your own separate premiums for each one. Now you can, in a lot of cases, make all those, you can ask the insurance company to put all those together and make it one premium when it comes out of your account that you're paying for every month, to try to simplify that. Here's the other thing. There's a couple of little pros and cons to this. Since each person has their own plan, that also means that the employer is not tied to it at all. So you as an employer, if you lose an employee and they have a plan that's individual, right, not a group, if they were to leave the company for any reason, they can take their insurance with them completely intact. They still have health insurance. As long as they're still paying for it, they'll still have it. You don't have to worry about COBRA. You don't have to worry about the paperwork going back and forth of trying to cancel plans and, getting your account information off of each one. So that's good. Also, there are some private plans out there who also provide 24/7 coverage. Most people don't know that most insurance plans don't cover them when they're on the clock, because typically the companies rely on workers' compensation for that, right? You turn it into workers' compensation because businesses all have to have workers' comp. But some plans out there will cover your employees when they're on the clock. And if so, depending upon which plan you have, many of them can't raise your rates. So based on claims, right? So if you have an employee working for you and they get hurt on the job, you may want them to file the claim with their individual plan rather than your workers' comp, because workers' compensation generally is going to raise your rates if you have claims, right? Because it's costing them more money. They're going to raise your rates. If you have an individual private plan, most of them will not. So you have to check into that, of course, each individual plan, but that's something you might want to look into. Because that could help you out a lot as far as, covering employees when they're on the clock, giving them some additional benefits. It's cheaper if you're paying for the whole thing or a percentage of it, or maybe you're just giving a stipend in their check. Just say, hey, I'm going to give everybody $200 a month towards your health insurance. You can have your whole family on it if you want to. You can have just yourself, but I'm only paying for $200 a month. You can do that and have them on their own separate plan, and you're still kind of protecting them, because if they were to leave your company for any reason, they're still insured. They don't have to worry about losing their coverage. So that's pretty phenomenal. I had a couple more questions, but I do see that's the end of our session today. We are going to do future sessions on health insurance because it is a pretty broad subject, and there's a lot of things that I can't put out there because it's so broad. I don't want to be too specific, plan specific, or, just even type of plan specific because of federal regulations. It's a very heavily regulated industry. So send me your questions though. If you guys have any questions about health insurance, my name's Craig Sawyer, of course, with the Biz Reveal. I also have my insurance company. My agency is called Sawyer Health Solutions, and you can email me at contact@Sawyer Health Solutions, and that's Sawyer's Sawyer. But email me at contact@SawyerHealthSolutions.com and send me all the questions you got. We'll tack it on a future episode, and we'll get that out there. In fact, I'll even respond directly to your email first, and then I'll put it on the podcast later in case other folks have that same question. You can visit my website at SawyerHealthSolutions.com, or you can call me at 239-677-9877. So hopefully you guys got a little something out of this. Sometimes it causes more questions than answers when you hear about it, but that's a good thing. Contact me. I am more than happy to get the answers for you. If I don't already have them, I have a lot of people that I'm surrounded with that can get them for you. So again, thank you for joining us today. It's the Biz Reveal. You guys can check out the Biz Reveal podcast website at thebizreveal.com. Of course, we're available on all the podcast apps, so choose your favorite one, and we'll be on there as well. And then check out our YouTube channel at The Biz Reveal. Thanks again for joining us today, guys. I hope you enjoyed it. We'll try to get back to the normal guest and host thing next week. Till next time.